Guys, Nate Plissken here. I just want to talk a little bit about inflation. We saw back in 2021, the Fed and the government had talked about the inflation that we were having was transitory, and that was just because of the pandemic. Although there was serious concerns from many people on the subject of inflation because of the massive money printing that's been going on and the quantitative easing policies by the Fed. So, really, what I want to talk about right now is the fact that inflation is a tax on the poor. With inflation, one thing we know is the poor are going to get poorer, and they are getting poorer, while the rich are getting richer. Inflation does not negatively affect the rich because they are buying asset classes. We're going to see asset classes rise, and we see the poor owning very little assets, but all their income, their disposable income, if there is disposable income, is spent on daily goods and services that they need for life. So an average family will spend most of their money on housing and on energy and on food. And these things are not even all weighted correctly in the index for the CPI for inflation. So we don't even get a very honest representation of inflation to begin with. But on top of that, we're seeing that what the poor people spend money on is getting more expensive. And while the rich people's money that they're spending on is also getting more expensive, their investment is growing, and so their money is going up. Inflation actually benefits the government in the sense that they owe so much money. For them to pay down the debt, it'd be easier for them to pay the interest on the debt with cheap money, and that money is the fact that though maybe we get another bailout or we get stimulus checks or whatever, those stimulus checks can buy less goods and services, but the taxes that we pay on that money is still maybe more because you're paying, say if your income goes up 5% and you're having to pay more taxes. Even if the money doesn't buy as much goods or services, the government is still getting more revenue to pay the interest on their debts. And also, it can show a nominal increase in GDP, while at the same time, the standard of living for average people is going down. For instance, we just had Easter weekend here in the States, and actually the Easter spending was way up. That means more people were going and buying Easter eggs and candy for their kids and Easter bunnies and all this stuff. But as you know, after the Easter egg hunt is over and the kids eat all the candy, or you have this candy sitting around in the house that you ration out to your children, or the plastic eggs that you buy that go in the garbage, you have nothing to show for it. Even if you spent 20% more on Easter eggs than you did last year, you just spent your money. You spent your paycheck. You spent your credit cards on making sure that your kids had a good Easter. Well, and a wealthy person who has billions of dollars or hundreds of millions of dollars or millions of dollars, when they're going to go, if they do celebrate Easter with their family, they spend a pittance on Easter eggs, that's not a big deal because the wealth of their income is going back into investments, whether that be gold and silver, whether that be Bitcoin, whether that be stocks and real estate. Their asset value is going up, so their wealth is going up. So what we need to be looking at right now is where are you putting your money, and you need to find a way, if you're an average person, if you're a middle or low income person. By the way, the middle class is shrinking drastically. That means people are either moving into the poor or they're moving into the rich. And the way to move into that rich category is to do what the rich do and spend your money on assets. This is very difficult, too, when the cost of living is going up. So, the gas that it costs to go to work is going up. Even if the gas prices do not go up, which I do believe they will over the summertime, I believe we're going to see an increase in gas prices. Even if they just stayed the same, Americans are already hurting. They already are spending more of their money on their electric bills, more of their money on gas, more of their money on just the necessities. So what we're going to see is a slowdown on people spending money on things that they just want, the poor and the middle class, that is. And we saw this today with Netflix. Netflix showed a loss in subscribers, some millions of subscribers, and we saw their stock price go down 30% in one day, over 30%. And so if you owned, if a lot of your assets were in Netflix, then you lost money. So just investing in the stock market necessarily isn't going to save you. The thing you have to think about is what assets are going to go up and what asset classes are going to go down. The reason for this decline is, think about it, Netflix is expendable. Netflix is for pleasure. Netflix is something extra you have in your life, and we're seeing now that, that market is being shrinking because you have Hulu, you have Disney Plus, and then you also have a bunch of people, when you can't afford Netflix, what are you going to do? You're going to call your aunt or your brother or sister, say, hey, can I use your Netflix login? And so we're seeing a lot of people sharing that. But that's just one instance. But I think we're going to see even less spending on things like new cars, less spending on things like cell phones, a new cell phone. When you can't pay your bills, you are not going to go buy the latest new iPhone if that's a luxury. And then you're maybe not going to go out to dinner more when you can't barely feed your family. So you're going to see people shifting from speculative investments like Bitcoin. I believe Bitcoin is a bubble, by the way, but keep that off the table. I see we're going to see a major decline in that in the future. But you could be a Bitcoin advocate, go more power to you. But as far as I'm concerned, I'm betting on that going down. But we got to look at what we have right now on the table. We're going to see more people spending more of their money on things that are necessities. That's food, energy, housing, and even medical, because that's something that's just not going away. But we're going to see a decline in spending on luxury items. That could be getting a new wardrobe. Now, what you are going to see is the rich people are going to continue to spend on things they want because their assets are going up. So, ironically, I think you're going to see a boom in things like the prices of fine wine because the cost of producing the wine is going to go up. The demand for the globally wealthy, we see actually a ascent in global wealth. Did you know that while the poor are getting poorer, that in 2021, global millionaires grew to 56.1 million. That means there are actually 56 million millionaires on the planet now. By 2025, global wealth is expected to grow actually by 37%. So you're going to see some assets that are luxury items that are far above the radar of the middle class and the poor actually go up in value. And I think one of those investment assets is fine wine. Fine wine has actually done better than the stock market in 2022. You can find some stats about that on my website at nateplissken.com. I recently wrote a blog about what is better, Vino Vest, Vent, or Colt for fine wine investing. Those are three wine investment vehicles that you can gain exposure to the fine wine market. Vino Vest and Colt Wine, you actually own fine wine, and they store it for you. Vent is actually an SEC vehicle where you can own stock in wine collections. It's kind of a new idea. Maybe it's not that new, but you don't actually own the wine. You own shares of stock in portfolios of wine, so that's kind of interesting. You can read more about that on my website at nateplissken.com. But we have to be thinking ahead. Where is the puck going to? In hockey, you don't go to where the puck is. You have to go to where the puck is going to go, and so that you can position yourself for success. So I definitely see certain asset classes like fine wine growing in value, while things that have done well right now in the last 10 years may see a decline. I believe like certain stock stock portfolios may see a decline in things that did very well in the past. Like I'm just saying, I love Apple. I have an iMac, I have a MacBook Air, and I have an iPhone. But I have an older iPhone, and I don't plan to buy a new one on credit anytime soon. Although I might, because I do like iPhones. But the thing is, the matter is that when the general population, who are the main consumers of these products, are going to have to scale back on their spending, where are they going to scale back on? So that's what you have to think about. Are consumers going to spend less money on things that they want but don't necessarily can afford? As we see interest rates going up, people are going to have to spend more money on paying the interest on their credit cards. As the Fed has mentioned, they're going to be doing several rate hikes in May and in the year of 2022. I think we're going to see a decline in the stock market in certain asset classes, whereas in others we may see a hit but then go up. Because look, gas prices are not going anywhere. They are not going down hard for the foreseeable future unless we invest more in that sector. And we see with the Ukraine war, the supply chain shortages with Russian oil companies being embargoed or whatever, or what do they call that? They call that. My brain just blew a little loop here, but it's sanctions. As we have sanctioned Russia. Now, Russia actually, we saw that Russia had a decline in their value of their currency immediately, and then now they've rebounded. They're actually doing as well or better and from their currency status than they were before the Ukraine war. Why? Because they have hard assets. They have oil and they have wheat and things like that they can sell on the open market to countries that don't care about our sanctions, like China. So what I want to say is, if you want to get ahead of inflation, inflation is not going anywhere. The only way that the inflation of the 1970s was ended by Volcker back in the 80s was high interest rates, very high interest rates. And I want to have the stat right in front of me. But if we were to try to raise our interest rates to those levels right now, there's no way that the government would be able to pay out the interest on their debt. The debt would be unsustainable. They wouldn't be able to pay the appreciation on the money that they borrowed. When you talk about the bonds that we have, the U.S. Treasuries. So we're in a very precarious state. I think we're going to see really soon that the Fed is going to admit that inflation is here to stay, and we're going to see a stock market crash probably in the near future, and then they're going to pull off even of the rate hikes that they have for now. So what can the average person do to protect themselves from inflation? Well, first of all, if you're living paycheck to paycheck, it is very difficult to invest in assets and in inflation-proof assets if you don't have any extra money. So I would recommend first that you find some extra inflation-proof income if you can find it. That means a side hustle or something like that. You need to figure out a way that your family can cut back on certain expendables and spend more money investing in inflation-proof assets, asset classes that are going to grow in value. That way you can possibly thrive and survive the coming storm of inflation. We may see hyperinflation in the United States when the people start losing trust in the government and they start seeing food shortages and things like that. Now, hopefully we won't see food shortages like they're seeing in Shanghai. Those were caused from massive lockdowns on their peoples. If you haven't heard, there's major crisis going on in China with food shortages and things like that, but that is because of draconian lockdown measures. Now, we tried that in the United States. It was very unpopular, and I don't think we're going to see that again because obviously they don't really work. It destroys your economy, the rise in depression, the rise in suicides, all those things, and hopefully we won't see those kind of measures again. But I just want to make this quick video. Follow me at natepliskin.com. Check out my latest blog What is better, Vino Vest, Vint, or Colt for fine wine investing? You can find out more about investing in fine wine. There's also gold and silver you could be investing in. Those are hard assets that if we did see hyperinflation, those are not going to lose their value because all over the world, gold and silver have never been worth zero. They're hard assets. So look into that. I believe the price of gold and silver are artificially pushed down to make the U.S. dollar look more desirable. So check that out. It's actually a fact that the United States government does manipulate the prices of gold and silver because they can, because they do that to protect the currency. As we saw back in the 70s when Richard Nixon got us off the gold standard, the government has been ever since then spending without having to pay the bill. And we've had that because of the United States having the world reserve currency. But as we saw recently, Saudi Arabia is actually at least have admitted to pursuing the idea of using other currencies as to buy and trade oil in when they talk to China about the yuan. We see that in the next century, that this century is predicted to be belonging to the Chinese, that their economy is going to outsurpass the United States. So, very scary times to be an investor. But if the United States loses their reserve currency status, all bets are off. You're going to see massive inflation. The dollar is going to lose a lot of value very quickly, and then you're going to see panicking as food prices and things like that are going to go up. Right now, shortages are going to increase because we can't buy things that we used to buy from China because they're not producing as much. And pretty soon we're going to see the Chinese are going to go ahead and start purchasing their own products instead of selling them here to the United States. I believe we're going to see that in our lifetime, whether that's in the next 6 months or the next 5 years or the next 10 years. I believe we're going to see that. So it's a very scary time to be in, but it's not something you can't prepare yourself against. I think every family should have at least 30 days worth of food stored for themselves in case of an emergency, as we saw how crazy the 2020s were with 2020 with the COVID crisis and the lockdowns. And we're coming into an election year in November for the House and the Senate of the United States, and who knows what they have planned for us to distract us from the things that really matter. If you notice, the government is all about distracting and dividing people left or right, and I don't want to do that. We all have desires for things. We need to come together as a society and realize that whether you're a liberal or you're conservative, that you're probably a person who cares about your family, you care about your friends, and you want them to have a better life. And I think in this day and age, identity politics are really not that important. I, for one, am generally conservative or independent, but that doesn't mean that I don't love gay people, I don't love transgender people, that any person of any race can succeed in America, whether you're black or white, and all lives do matter, and especially black lives matter, and I hope that even white people's lives matter. Now, it's a bad thing to say, right? But the thing of the matter is, all these topics that the government pushes on us are a distraction. I think I like what that rapper Ice-T said when he said in his body count video. If you need to watch that video, it's called "All No Lives Matter," and that's really because what it comes down to is the biggest crisis of our time is not global warming, it's not racism, it is going to be global poverty. It's income disparity. And as we see that income disparity increase, we're going to see massive social unrest. If the government defaults and cannot pay for social services like, we see with food stamps or SNAP benefits and things like that, we're going to see some massive, crazy times in our lifetime. And in fact, even if SNAP doesn't default, if you see that your SNAP benefits barely buy you the same amount of food that you used to buy, that's going to cause more social unrest. And the fact of the matter is that everyone's purchasing power is declining. So we already know poor people are spending more of their money on energy, food, and housing. And so what I would just say, to summarize this video, my plea to you is find a way to increase your income through multiple sources of income. Find a way to generate some extra income and put that income in to assets that are going to grow. Put it this way, you can't beat them at their own game. The best thing you can do is to join them. So we have to act like the wealthy do, even to survive and thrive in this economy. So with income disparity happening, the best thing you can do is to join the wealthy and open your eyes and realize that this is a game that's being played upon us. That's the currency inflation, the global reset, and we can do what we can do by preparing for inflation and making wise choices, finding extra income to put away into investment-proof assets that are going to continue to grow in value, and that way we can survive and thrive in this coming crisis of inflation. Well, I hope you enjoyed this quick little video. Check me out on NatePlissken.com. That's NatePlissken.com. Kind of like Snake Plissken, but Nate Plissken. And just check out some of my videos. I focus on money life, sex life, and green life because I'm also a gardening enthusiast, and I enjoy talking about things like sex and money. And those are some things that I think are important to everyone, especially us guys, and so I hope my information is helpful. Anyways, have a blessed day. This is going out the end of April, and I hope you're doing well. Please comment and subscribe to my channel, and let me know what you think about this video.